Most traders fear losses, even very small losses. The moment a trade turns red, something changes inside the mind. There is tension. There is discomfort. There is an urge to act quickly. Close the trade. Adjust the stop loss. Do something to escape that feeling. But here is a truth that most traders do not fully understand. Small losses are not the problem. Small losses are the foundation of long-term profits. And until this idea becomes clear in your mind, trading will always feel stressful. It will always feel uncertain. Because you will always be trying to avoid something that cannot be avoided. In this video, I want to explain something deeply important: how small losses lead to big, long-term profits. Because once you truly understand this, your entire relationship with trading begins to change. You stop fearing losses. You stop reacting emotionally. You start thinking long-term. And that is when consistency begins. If you stay with me until the end of this video, you will understand why small losses are necessary, how professional traders use them, and how you can train your mind to accept them without hesitation. And if you want to continue building a strong trading mindset, consider subscribing to Bull Mindset. This channel is focused on trading psychology, discipline, and long-term consistency. Now let us begin with a simple truth. Trading is not about avoiding losses. It is about controlling losses. Every trader loses. No system wins all the time. No strategy avoids loss completely. Loss is part of the game. But the difference between successful traders and struggling traders is very simple. Successful traders take small losses. Struggling traders take large losses. That is the difference. Now let us go deeper. What is a small loss? A small loss is controlled. It is planned before entering the trade. It is defined. It is accepted. It has a clear limit. A small loss is not emotional. It is part of your system. Now, what is a large loss? A large loss is unplanned. It is emotional. It happens when you refuse to accept a small loss. It happens when you move your stop loss. It happens when you hold on to hope. It happens when you try to avoid being wrong. And this is where most traders lose money. Not because they take losses, but because they take the wrong type of losses. Now let us talk about why traders struggle with small losses. The first reason is emotional discomfort. Loss feels painful. Even a small loss creates stress. The brain wants to avoid this feeling, so it looks for ways to escape. The second reason is ego. Traders want to be right. They want their analysis to work. They want to feel confident. So when a trade goes against them, they resist it. They delay the loss. They hope the market will come back. The third reason is misunderstanding success. Many traders believe success means winning most of the time, but that is not true. Success means managing losses correctly. Now, let us talk about how professionals think differently. Professional traders expect losses. They do not try to avoid them. They plan for them. They accept them. And because of this, they do not react emotionally when losses happen. They remain calm. They remain disciplined. They simply move to the next trade. Now let us go deeper into how small losses lead to big profits. Trading is a game of probability, not certainty. You do not need to win every trade. You need to manage your wins and losses correctly. Imagine you take 10 trades. You risk 1 unit on each trade. You lose 6 trades, and you win 4 trades. At first, this looks like failure, more losses than wins. But if your winning trades are larger than your losses, you can still be profitable, because your losses are small, and your wins are bigger. This is the key. Now let us look at the opposite situation. You take 10 trades, but you do not control your losses. Some losses become large. Now, even if you have winning trades, the large losses destroy your profits. This is why small losses are powerful. They protect your capital. They protect your consistency. They allow your system to work over time. Now let us move into real trading behavior. Imagine a trader enters a trade. The trade goes into loss. They feel uncomfortable. They move the stop loss. They give the trade more space. They hope it will recover, but it continues moving against them. Now the loss becomes large. Now the damage is significant. This is emotional trading. Now imagine a disciplined trader. They enter the same trade. The trade reaches the stop loss. They accept it. They close the trade. The loss is small. They move on. Now their account is protected. Their mindset remains stable. Now let us consider another situation. A trader experiences 3 small losses. They feel frustrated. They start doubting their system. They change their strategy. They stop following their plan. Now when a winning trade appears, they miss it. This creates more frustration. Now imagine a professional trader. They experience 3 small losses. They do not react emotionally. They understand that losses are part of the system. They continue following their plan. And when the winning trade appears, they are ready. This is long-term thinking. Now let us talk about mental frameworks that support this mindset. The first framework is acceptance. You must accept that losses are part of trading. Without this, you will always struggle. The second framework is long-term thinking. You must think in terms of many trades, not one trade. The third framework is discipline. You must follow your rules, even when it feels uncomfortable. The fourth framework is detachment. Do not attach your identity to a trade. It is just one outcome. Now let us talk about something deeper. Small losses build mental strength. Every time you accept a loss without reacting, you become stronger. You become more disciplined. You become more consistent. But every time you avoid a loss, every time you move a stop loss, you weaken your discipline. You train your mind to react emotionally. Now let us talk about practical exercises. One powerful exercise is pre-acceptance. Before entering a trade, say to yourself, I am willing to lose this amount, and truly accept it. Another exercise is strict stop-loss discipline. Once your stop-loss is set, do not move it, no matter what. Another helpful practice is journaling. After each trade, write down, did I accept the loss? Did I follow my plan? This builds awareness. Another exercise is reviewing your largest losses. Look at your biggest losses. Were they controlled, or were they emotional? This helps you improve. Another important exercise is setting a daily loss limit. If you reach that limit, stop trading. This protects your mindset. If this video is helping you understand the importance of small losses, consider subscribing to Bull Mindset, because accepting losses is the foundation of trading success. Now let us move toward the final message. You will have losing trades. You will feel discomfort. You will feel doubt. This is normal. But your success depends on how you respond. Because small losses are not your enemy. They are your protection. They keep you in the game. They allow your system to work. Let me leave you with one final thought. Big profits are built on small losses. Without controlled losses, long-term success is not possible. So stop fearing small losses. Start respecting them. Start accepting them. Because that is how professional traders think. And if you want to continue building that mindset, subscribe to Bull Mindset. I will see you in the next video. Thanks for watching.